The impending revaluation of the Iraqi Dinar, IQD, and Vietnamese Dong, VND. Hype or reality? Investors, currency enthusiasts, and market analysts are closely watching developments surrounding the potential revaluation of the Iraqi Dinar, IQD, and Vietnamese Dong, VND. Rumors of an imminent announcement are spreading quickly, raising the question, will this finally be the financial breakthrough that many have been anticipating, or is it just another cycle of speculation? If the revaluation occurs, how will it impact global markets, personal holdings, and future investment strategies? The anticipation is high, and the stakes are even higher. Let's delve into the latest updates, expert insights, and essential preparations before the financial markets react. The evolution of digital finance and IMF policy revisions. The financial world is undergoing rapid transformation, with digital currencies playing a crucial role in shaping the global economic landscape. The International Monetary Fund, IMF, is updating its policies to accommodate these changes, which could have significant ramifications for Iraq's financial system. Iraq is reportedly preparing to launch a digital version of its currency, the digital dinar, backed by international financial institutions. Alongside this initiative, a new framework is being introduced to safeguard U.S. economic and strategic interests, while simultaneously preventing unilateral military support for Palestine. Additionally, Iraq's coordination framework forces have reached an initial agreement to integrate various armed factions into the Popular Mobilization Forces, PMF. The agreement stipulates compliance with Supreme Military Command directives and refrains from actions that could jeopardize U.S. interests in Iraq. This effort aims to foster political and economic stability in a region often plagued by volatility. Understanding Iraq's exchange rate. Transition. Exchange rates significantly influence daily life, affecting everything from the cost of goods to the affordability of international travel. A stable exchange rate simplifies transactions, boosts investor confidence, and supports economic growth. A senior financial official in Iraq recently stated that the country is moving towards a singular official exchange rate, supplemented by a digital exchange rate system. But what does this actually mean in practice? Official versus market exchange rates. The official exchange rate is determined by a nation's central bank or government, establishing the value of one currency in comparison to others. Currently, Iraq follows a fixed exchange rate system. However, the proposed shift towards a single, stable exchange rate would unify official and market rates, eliminating discrepancies and uncertainties. Why a unified exchange rate matters. A single exchange rate would provide stability and predictability in financial transactions. By eliminating the gap between official and market rates, businesses, investors, and consumers would operate under a clear and standardized financial framework. Additionally, a stable exchange rate can encourage foreign investment. Investors are more likely to enter a market where currency valuation is stable. Enhance business transactions. Companies engaged in international trade would benefit from reduced currency fluctuation risks. Simplify travel costs. Tourists and business travelers would no longer have to track fluctuating rates constantly. Boost economic growth. A clear and consistent exchange rate could help attract international businesses to Iraq. The role of the digital dinar and digital exchange rate. The digital exchange rate concept refers to an electronic currency system managed by Iraq's central bank. Several nations, including China, have pioneered digital currencies, and Iraq is now exploring a similar approach. The implementation of a digital currency could enhance financial transparency, improve transaction efficiency, and modernize the nation's banking infrastructure. For the everyday consumer, digital transactions could make payments faster and more secure. However, transitioning to a digital currency could pose challenges, particularly for those unfamiliar or uncomfortable with digital finance. Challenges and potential resistance. While a unified exchange rate and digital currency system offer several advantages, they are not without opposition. 1. Currency speculators. Individuals and businesses profiting from currency fluctuations may resist a stable exchange rate as it limits speculative opportunities. 2. Public hesitation toward digital transactions. Not everyone is ready to embrace digital finance. Certain segments of the population may struggle with the transition, creating disparities in financial accessibility. 3. Inflation concerns. If Iraq does not carefully manage its shift to a unified exchange rate, it could lead to inflation, reducing purchasing power and affecting everyday citizens. Impact on Iraq's economy and the global market. Iraq's economy is heavily reliant on oil, which constitutes over 90% of national revenue. Global oil price fluctuations influence the strength of the dinar, affecting exchange rates. The Iraqi central bank's move toward a market-driven exchange rate system could provide long-term stability, but may also introduce short-term volatility. Effects on foreign investment. A well-executed shift to a stable exchange rate can increase investor confidence, attracting more capital into the country. However, if the transition is mishandled or perceived as risky, investors may hesitate, leading to capital outflows and economic instability. Inflation and consumer impact. Rapid changes in exchange rates, particularly if poorly regulated, could lead to inflation. If the dinar weakens, everyday goods and services could become more expensive, placing financial strain on households and businesses alike. Effective monetary policies will be essential to mitigate these risks and ensure a smooth transition. Preparing for change. What can investors and consumers do? Financial literacy and preparedness are key when dealing with major currency shifts. Here are some steps that individuals and businesses can take. Stay informed. Keep up with the latest financial news and developments in Iraq's currency policies. Diversify investments. Holding assets in multiple currencies or stable investments can reduce exposure to financial risk. Understand digital currency. Familiarizing oneself with digital finance can help in adapting to the changing financial landscape. Monitor inflation trends. Keeping an eye on inflation and exchange rate shifts can help individuals make smarter financial decisions. Final thoughts. A game changer or just speculation? Iraq's potential shift to a unified exchange rate and a digital currency system could have profound implications for daily life, business operations, and investment strategies. If implemented successfully, these changes could provide economic stability, enhance financial transparency, and attract international investors. However, careful execution is necessary to avoid pitfalls such as inflation and market uncertainty. Will a single exchange rate benefit Iraq in the long run? Will digital finance reshape the country's economic future? These are questions that remain to be answered as policymakers work towards a transformative financial shift. What are your thoughts on these potential changes? Do you believe they will strengthen Iraq's economy? Share your opinions in the comments below. Don't forget to like, share, and subscribe for more in-depth financial analysis and updates. Stay informed, and we'll see you in the next discussion.